For many Americans, the path to homeownership feels blocked by two major obstacles: saving for a large down payment and meeting strict credit score requirements. But there's a government program that's been helping homebuyers overcome these hurdles since 1934. It's called the Federal Housing Administration Loan Program, or FHA for short. Today, we're breaking down exactly what FHA loans are, how they differ from conventional mortgages, who qualifies for them, and whether they might be the right choice for your home buying journey. This video is for informational purposes only and is not intended as financial or mortgage advice.
FHA loans, their delinquency rate, while always higher,
what are the pros and
has
cons?
been rising recently. Now
Who
hitting
qualifies?
Individuals who hold lawful, permanent resident
Layman's
status.
term. What is an FHA loan?
Let's start with the basics here. An FHA loan is a mortgage that's insured by the Federal Housing Administration, which is part of the U.S. Department of Housing and Urban Development, or HUD. Unlike conventional loans, which are backed by private lenders or agencies like Fannie Mae and Freddie Mac, FHA loans come with a government guarantee. This government backing is the key feature that makes FHA loans special. Because the FHA insures these loans, lenders can offer more favorable terms to borrowers who might not qualify for conventional financing. FHA loans typically feature lower down payment requirements, as little as 3.5% of the purchase price, more flexible credit score requirements, potentially as low as 580, higher debt-to-income ratio allowances, giving borrowers much more purchasing power, and more lenient standards for recent financial events like bankruptcies or foreclosures. These features make FHA loans particularly popular with first-time homebuyers, those with limited savings, or people who are rebuilding their credit. In fact, about 80% of FHA loans go to first-time homebuyers. Now that we understand the basic concept, let's drill down into the specifics of how FHA loans work. Unlike what some people believe, the FHA doesn't actually lend money directly. Instead, you get an FHA loan from an FHA-approved lender, typically a bank, credit union, or mortgage company. What makes these loans unique is that the FHA provides insurance to the lender. If you default on your loan, the FHA will step in and pay the lender. This insurance reduces the lender's risk, which is why they're willing to offer more flexible terms. The insurance doesn't come free, however. FHA loans require two types of mortgage insurance premiums. The upfront mortgage insurance premium, or UFMIP, is 1.75% of the loan amount. It's typically rolled into the total loan rather than paid out of pocket. The annual mortgage insurance premium, or MIP, ranges from 0.15% to 0.75% of the total loan amount, depending on your loan term, loan amount, and down payment. It's paid monthly as part of your mortgage payment. Let's talk about who qualifies for an FHA loan. The basic requirements include a credit score of at least 580 for a 3.5% down payment, or a score between 500 to 579 for a 10% down payment. A debt-to-income ratio typically not exceeding 43%, though exceptions can go higher. Steady employment history and income verification. The home must be your primary residence, not an investment property. The property must meet FHA minimum property standards. You must have a valid social security number and be a lawful U.S. resident. And it's worth noting that these are the FHA's minimum guidelines. Individual lenders may add their own requirements, known as lender overlays, which might be more restrictive. Now, let's talk about the property itself. Not every home qualifies for an FHA loan. The property must meet certain standards designed to ensure it's safe, secure, and worth the loan amount. An FHA-approved appraiser will inspect the property to verify the roof, foundation, and overall structure are sound. Electrical and plumbing systems are functional and safe. There are no lead-based paint hazards, especially in homes built before 1978. There are no health or safety issues like mold or pest infestations, and the property meets local building codes. These property requirements can sometimes be a hurdle, especially when purchasing older homes that might need repairs. However, the FHA does offer a special loan product called the 203K loan, which allows you to finance both the purchase and the renovation of a home with a single mortgage. Another important aspect of FHA loans is their loan limits, which vary by county and are based on local housing costs. In 2024, the FHA loan limits range from $498,257 in low-cost areas to $1,149,825 in high-cost markets like San Francisco or New York City. So, what are the pros and cons of choosing an FHA loan? Let's break it down. The advantages include lower down payment requirements, helping you get into a home sooner, more flexible credit score requirements, opening soft doors for those with less than perfect credit, potentially lower interest rates compared to low down payment options, allowance for higher debt to income ratios, the ability to receive down payment gifts from family members or assistance programs, no prepayment penalties if you want to pay off the loan early. However, there are also some drawbacks, like mandatory mortgage insurance for the life of the loan in most cases, unlike conventional loans where PMI can be removed once you reach 20% equity, potentially higher total costs over the life of the loan due to this ongoing insurance, stricter property requirements that may limit your home choices, loan limits that might be too low in some high-cost housing markets, potentially longer processing times due to the additional inspection requirements. For many borrowers, FHA loans serve as a stepping stone. They use an FHA loan to purchase their first home, build equity, improve their credit, and then eventually refinance to a conventional loan to eliminate the mortgage insurance, or PMI. Let's explore a few scenarios where an FHA loan might be particularly beneficial. Scenario 1. First-time buyers with limited savings. Let's say you have steady income but haven't been able to save a large down payment. With an FHA loan, you could purchase a $300,000 home with just $10,500. That's 3.5% down versus $60,000, which would have been 20% down for a conventional loan without private mortgage insurance. Scenario 2. Buyers recovering from credit challenges. Perhaps you experienced financial difficulties during the pandemic that affected your credit score. With a conventional loan, you might need a score of 620 or higher, but an FHA loan might be available with a score as low as 580. Scenario 3, multi-generational households needing specific property features. FHA loans can be used for properties with up to 4 units, as long as you live in one of them. This can be perfect for extended families or those looking to offset their mortgage with rental income. How does the application process work? The steps are similar to other mortgages. Start by getting pre-qualified or pre-approved to understand your budget range. Find an FHA-approved lender and complete a full application. Provide documentation of your income, assets, and debts. Find a home that meets FHA requirements. Have the home appraised by an FHA-approved appraiser. Complete the underwriting process. And finally, close on your new home. That's the process, A to Z. One common question is whether you can refinance an FHA loan later. The answer is yes, and there are several options. The FHA Streamline Refinance makes it easy to refinance one FHA loan to another with minimal paperwork. The FHA Cash Out Refinance allows you to tap into your home's equity. You can also refinance to a conventional loan once you've built sufficient equity and improved your credit. It's worth noting that FHA loans aren't the only government-backed mortgage options. If you're a veteran, you might want to qualify for a VA loan with no down payment. If you're buying in a rural area, a USDA loan might offer 100% financing. And if you have stronger credit but still want a low down payment, conventional 97 or 95% loan to value products might be worth exploring. Now, here are some common misconceptions about FHA loan that are worth clearing up. FHA loans are only for first-time home buyers. Fact: while popular with first-time home buyers, anyone who meets the requirements can use an FHA loan regardless of whether they've owned a home before or not. Myth: FHA loans take much longer to close than conventional loans. Fact: while processing times can vary, many FHA loans close in 30 to 45 days, similar to conventional loans. Myth: you need perfect credit for an FHA loan. Fact: FHA loans are specifically designed for borrowers with less than perfect credit. Myth: you can't make a larger down payment with an FHA loan. Fact: 3.5% is the minimum. You can absolutely make a larger down payment, which may reduce your mortgage insurance premiums. As the housing market and lending environment continue to evolve, FHA loans remain a valuable tool for homeownership. If you're considering your mortgage options, an FHA loan might be worth exploring, especially if you face challenges with down payment savings or credit history. Flux Media is a real estate media company. We are not licensed to provide financial advice, mortgage services, or lending consultation. If you have specific questions about whether an FHA loan is right for your situation, we highly recommend speaking with a licensed mortgage professional or housing counselor. If you enjoyed this explanation of FHA loans, subscribe for more content that demystifies often confusing world of real estate, mortgages, and homeownership, because I know how it is. Square footage, squared away. This is Square Footnote.